What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about Upstart, ticker symbol UPST. They are going to be reporting earnings for their first quarter fiscal year 2023 next week. So I'm going to break down everything you need to know about this business. Now Upstart is quite an interesting company because on one hand they've got the tailwind of AI, they are artificial intelligence and powered, and on the other hand they've got the headwind of the credit crunch and of course all the headwinds related to interest rates going higher and the loan volumes decreasing. So Upstart, we've traded that in the past and it has obviously been sold off quite aggressively from its all-time highs, currently down I think over 80% from its all-time highs. So we're going to break down everything you need to know about this company moving forward. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. The first week of the month is the best time to join, and again you'll get access to all the private live streams and the private benefits as well. So this right here is going to be the numbers for Upstart, and before we get there, this right here is the monthly chart, and from $409 Upstart is actually down over 96% from its all-time highs, trading now at roughly over $13 per share at just over $1 billion market cap. Now this right here was the entire move in 2021 because of the lower interest rates, lots of activity, and as a result Upstart rallied over 1,600%, and we were taking advantage of this. I remember basically talking about this stock back in May of 21 when it was trading at roughly around $115 and exited the position completely when it rallied over 200%. And of course, we've traded the stock here and there with some options every so often, but of course, the overall trend has been very much lower. Now we're trading at just over $12, $13. Now, Upstart at a glance. So Upstart is an AI lending marketplace partnering with banks and credit unions to improve access to affordable credit. That is in a one line exactly what the company does. So again, I told you the tailwind is the AI, so artificial intelligence, but the headwind is lending, right? So they've got basically they've got one positive and one really big negative, and right now the environment that we're in with higher interest rates and credit crunch and banks failing and of course loan activity going down, Upstart really is going to be going through some tough times here, and they have already shown that in their reports. So two-sided business, consumers connected to AI-enabled lenders, and over $32 billion of loans have been facilitated by their platform, and 82% of them are loans that are instantly approved and fully automated. So I consider them to be very similar to SoFi. Of course, SoFi has many other products and services and other parts of their business as well. But when it comes to lending, Upstart, I would say, is very similar to what SoFi also is, because a lot of their origination also happens in the core personal lending business. So revenue $147 million in the fourth quarter 22, down 52% year over year. And operating income was a operating loss of $58.5 million, down from $60.4 million operating profit in 21. So really what happened with Upstart was 2021 was such a great year with revenue, income, profitability, margins, everything was going up. And as a result, so did the stock price. And then as soon as things turned, we started to see the revenue decline. So you can see see these quarters here, quarter over quarter revenue going down, operating income going down, contribution profits going down, and everything started to kind of turn sour. And as it did, so did the stock price. Of course, this shift happened very, very quickly, and so the stock price also reflected that very, very quickly, down over 96, 97%. And of course, contribution margin also down 45% on a year-over-year basis. I, in fact, talked about Upstart back in, I want to say early 2022, or it might have been like right around here, or it might have been a little bit later, before that even, October, November 21. I have to go back, but I literally specifically talked about how and why you should avoid this stock. I talked about this, and it was already up like 800, 900%. The valuation was way too out of whack. I think it was trading at over 30 or 40 or something $billion. And I specifically talked about why to avoid this stock, because it was way too overvalued at that point. The valuation just did not make sense for this company. This right here is going to be the year-over-year numbers. So year-over-year revenues are still stable and growing. So you can see that exponential growth from 233 million to over $849 million, right? So that's the growth that really resulted in the stock price taking off. But then more recently, you can see the revenues kind of stagnant, and more specifically, the profitability has turned negative. So for last year, they reported an operating loss of 114 million. That's down from 140 million of positive, operating profit in 21. And contribution margin was up 12% year over year, representing 49% of the fee revenue. And net loss was just a little bit over $108 million. So personal unsecured lending. So model accuracy improved as much as last 7 months and the prior 2.5 years. So bank and credit union partners, they're sitting at now over 92. This right here is the auto lending business, which just more recently got started, I think in the last couple of years. And now they're sitting at over 778 dealerships that are using Upstart to finance auto loans for their borrowers. So Upstart funded greater than 20% of total funded loans at participating dealerships. And when presented with an Upstart loan offer, borrowers chose Upstart 42% of the time. So almost half the times Upstart is being chosen, the loan offer is being chosen by the borrower. This right here is the addressable market that they really see at over $5 trillion. So a lot of it is going to make up for the mortgage lending, so 3.3 trillion. 780 billion is going to be the auto loan market, and personal 162 billion, and small businesses 644 billion. So even in my SoFi video, I talked about what is more risky. Is it the mortgage or the auto loan? It's the auto loan, right? What is more risky, the auto loan or the personal loan? It's obviously the personal loan, right? So I mean, mortgages and auto loans can still be somewhat considered as less risky, but if you take a look at the risk grade, I would put mortgages as the least risky, auto loans at somewhat risky, because again, you still have the collateral. You can seize the car, the lender can seize the car and sell it for parts, sell it, to salvage whatever they can. But the car itself is a depreciating asset as opposed to the mortgage on a home, which the value, can go down year over year, but over the long term, we've seen the real estate market kind of appreciate over time. So the probability for the lender to recoup their investment through a home versus a car, they see home as being less risky than a car. But of course, then personal lending is completely unsecured line of credit, which is the most risky business that a lender can basically engage in. So that is that's where right now where Upstart really focuses on, that and the auto loan, but they're going to branch out to mortgages as well over time, where I think they see a lot of opportunity as well. And this right here is their risk grade, and what's this showing us is the comparison with FICO scores. So what we're seeing here is from top to bottom the different FICO scores, so 700 above, between 680, 699, 660, 679, 640, and 639 below. So that's the FICO score. And this right here is the Upstart's risk grade, A+, B, C, D, and E-. And this is the averages. So what they're really showing us here is that even though on a FICO score basis, a borrower may seem risky to the actual credit agencies, 3.5% default rate at 639 below FICO score, but that's still not as bad as what the FICO score suggests according to Upstart. So they get an A+ rating, risk rating. So their default rate is only 3.5%. Whereas if you go over to E-, their default rate is over 18%. So they've got a much wider range of these risk analysis, and they believe that even people with, let's say, 640, 659 FICO score not necessarily have a high default rate, because they obviously are looking at different things, different parts of their profile, using AI to kind of better determine if the default rate is higher or lower. So their risk grade is basically able to use AI and look at their profiles and determine what is the probability of the defaults happening for these borrowers. So what they're really suggesting is 14 times more defaults between the highest and lowest Upstart risk rate. So again, that's going to be 1% to as much as 14.4% on average, and 3 times more defaults between the highest and lowest credit scores. So again, they do a lot of analysis with risk and credit. This right here is going to be the revenue. Let's just go over to the balance sheet. We've already talked about this, and year over year, we've seen significant declines here for Upstart. So the business really is struggling at the moment. And cash equivalents have really come down from about $1 billion to $532 million. As you can see, the fourth quarter 21, it was sitting at $1.2 billion. And loans, notes, and residuals sitting at over $1 billion, and that's at fair value. These are the loans that they've lent out, and this is at fair value. And unfortunately, this number, I wouldn't be surprised that the value of this comes down as interest rates have gone up. So as interest rates go up, the value of these loans on an unrealized basis starts to come down. That becomes a big problem. That's what happened with SVB. Total assets at $1.9 billion, total liabilities $1.2 billion. So that's still a pretty decent balance sheet, but again, they're not sitting on a lot of cash. Borrowings are at close to 1 billion, and they've also got loans sitting at a fair value, which may decline on an unrealized basis. And this right here is the outlook for next week. So they're suggesting only $100 million of revenue. Revenue from freeze, 110 million, net interest loss of $10 million, and then 55% contribution margin with a net loss of $145 million. So if you come over to the chart, you'll notice that this right here, the earnings, negative 82 cents per share, with the revenues coming in just under $100 million. And this right here really is going to be that technical analysis where we are sitting at this support at 12 bucks. So every time we come down to $12 per share, we get some buyers to step in, and we see a little bit of momentum back higher for Upstart. But on a more broader basis, the overall trend is that Upstart is very much still declining, making lower highs, and this is a little bit of a descending triangle as well, because we continue to make these lower highs while that support sitting at 12 bucks per share. So that's going to be the analysis. I mean, if the earnings come in better than what the expectations are, and by that I mean they still report losses, but not as much as what analysts are expecting. Maybe the revenue comes in a little bit higher, but I doubt, considering everything I know about the economy and the recession indicators, and of course interest rates and lending and the banking crisis, it's going to be quite difficult for Upstart to show us a huge surprise on the upside. If they do, I wouldn't be surprised if Upstart starts to see a bit of a momentum back higher, but 12 bucks is going to be that support level to watch. I don't have a fair value on this company anymore because they're not profitable anymore. They are suggesting for a loss. And eventually, if they can survive 23, 24, and they're able to come out on top on the other side, then I think there is potential for this company with AI. And of course, the lending business needs to start to pick up again moving forward. So hope you guys enjoyed this video and a complete update on Upstart. Let me know your thoughts down in the comment section below. What do you think about this company? Are you buying, selling, holding? Love to know. As always, happy investing, and I'll see you all in the next video.